Hello, hello, good morning. Welcome to another ES Futures Trading stream. Today is Wednesday, September 27. It is 9:15 a.m. Eastern Time in the US. Okay. From yesterday, so let's check what happened yesterday. From yesterday, we had overnight inventory that was 100% sure that wasn't corrected. Now, when the correction doesn't happen, when we have 100% short inventory and there is no correction, no contraction to overnight inventory, it's a sign that the market is weak. And also we have these multiple references in the multiple time frame reference, a bunch gathered together. The market is at this level that is key, when the market can be bought or can have a bounce or can just go through this really fast. The situation with the inventory is very short. Notice where the market is, was trending lower for 1, 2, 3, 4. I mean, should I consider this one too? Yeah, 2, 4. Yes, even if I start from here, 2, 4, 5, it's very extended to the lower side. Very extended to the lower side. And now the characteristic, something that I've noticed is every single level in the upper side, in the lower side is being the market is paying attention to those levels. Every single one, which is a sign of who is doing the trade. If there is some serious selling, for example, the market will not do that. Will not stop here being sold on this sample, right? That's a sign that the bigger participants of the market are not here. They are always present, but not there is no interest. Now, you've been, or I have been, starting to hear, right, that a good level, a level that's going to attract buyers is around the 4,200. You can start to hear that on the broadcasts now. What is the 4,200? The 4,200 is where the 200 SMA is right now. 4223. It's around the 4,200. Also, around the 4,200 is this pullback. We have this 10% pullback from this high. 7% is exactly at where it was bought yesterday, and this is the second time the market has this kind of pullbacks, around 7% pullback. And the last time it happened, I guess it was this. It was this low from the previous month, from August. It was bought close to 7%, and now it's being bought exactly 7%. If the market comes down closer to this area, we may see some acceleration here on this side, because hedge funds, all those companies that trade big capital, they don't trade their money. They trade somebody else's money. Right? They invest somebody else's money. Their customers, when they see the market coming, selling. They will start to get nervous. They will start to get calls. Why you haven't sold? Why you haven't sold up here? It's coming down here. You're still, my position is losing more and more and more. Stuff like that. I'm not saying that it's going to happen, but that's a situation. That's one scenario that can happen. The market gets in this area or even closer to this area. So far, the market has been bought from the 50s and the 100s. Very technical trading. Right? That's to put context. That's to add some more information to this movement that we are having here. The market stopped at, what was this level? I don't remember now. Because once 42.26, yeah, this level here was a breakout on the weekly, which also was very, very close, just a couple hundreds from a breakout on monthly as well. Weekly, monthly, and of course was daily too. And that coincidence, that fact that those 3 time frames have the same reference increases the odds that yesterday the market was going to take that level. Now, in the weekly time frame, now we have excess. We have a range here. Check this out. A range here, an excess now on the lower side. The market has looked below this range. Notice though that this is a big range here. No, but you can consider this maybe all these arranged. But before consider the whole thing arranged, let's do just, yeah, actually yes, this one here. Because it makes a low, makes a high, comes back around the center, and then look above face, third time. The third time is the chart here. And I would say maybe the range is up here, this level. And notice how it's separated here. One range here, one range up here. The trade here has been completed. The market has revisited the opposite side of the range a third time now. It's looking below. There could be a look below and fail, or it can have downside continuation, or it can have start building value in between these two accumulators, two ranges. The monthly as well. The monthly has also, you have a 2-month range has come back below, and now we have excess below this range, this 2-month range. We have excess below. There is penetration of this 13-month range. We have 13-month range in the monthly, and the market is looking inside. Notice too, before that, let's check the daily. Yeah? Notice where the market has been bought, exactly from the high of this range. These ranges also, when the market has these ranges, in movements like this one, the market tends to stop. It trades faster here, but when you have ranges, the tendency is that the market takes its time to, because there is volume there. That's the reason. There's volume. It's back and forth. But what happened? What do we have below this range? We have nothing here. Nothing all the way down to here, which is below the 200 actually. Now, the thing I was going to that's something that's calling my attention as well, is the fact that we have a very extended market to the downside. And guess what? What's Friday? Friday is the end of the month. Okay? Friday is the last day of September. The market's very short. Each time is getting shorter and shorter, and more inventory is being held in weak hands. What I mean with that? This, for example, right? The selling that came, and the rally high that the market made yesterday is a double high. KLM also are like triple high here. Overnight session, holding the inventory here, holding the short here from way up here. High made from POC. Emotional market here, emotional damage. Okay, emotional market here. This day, FOMC, double highs. Okay, poor and weak, because this also was overnight high. High made or market sold from POC, previous day POC. And this high also, it's not that obvious, but this high is was also sold from value area low of this absolutely crazy day here. No, this was the crazy day. This one here. But this is quite peculiar also, right? We have multiple highs, take the stops, and then boom, let's go to the downside. And where this high is, overnight POC. All the way up to the 4600. So the same kind of weakness, the same kind of structure that we have in this process, in this rally that came, where it came from. This is the previous contract. It starts here, and the other one starts here. And all this rally here. It is very weak. The structure of all this rally we have here is very weak. And the break or the correction that we are having is also very weak. Now, we are just 2 minutes before the opening. Inventory is very short. Overnight inventory is 100% long. Notice, but sell. Everything is to the upside. One of the most common, most popular trades is corrections of overnight inventory, which in this case would be a break. If that happens, the market will be selling. Traders are accustomed now to sell the market, sell rallies, because the market is breaking. And following price is the only thing that will get you. Now, the closer to the center, the higher the odds the market is going to have. It's going to be a rotational. Then also, the closer to the center, the higher the odds of chop as well. I am approaching this market 1 day at a time. Now, another situation we have here looming is the shutdown, the government shutdown. Now, there is some talks, some progress in that. And now, just imagine this: what can happen if there is no shutdown? It looks like everybody's counting in a shutdown. Well, the market is open right at this multi-time frame reference. Remember the weekly, monthly, and daily time frame breakout, this 43.25.5. Market is right there. Has opened right there. Perdí mi apuesta por el rock and roll. The exception, I tend to let the market settle here when we have this kind of openings. There's one exception, when we have, when we talk about the odds of chop rotation in days like today, the exception that is if or when the market fingerprint its way out of the range. You have this range. We have a big break, for example, takes this low and market comes all the way down to here, outside this. That's the exception. It could be to the downside, could be to the upside as well. Another low volume day to open. I wasn't that excited yesterday when the market opened down here. I think that's a good sign, right? I'm not getting that emotional. Much less today. This multi-time frame reference is also the high. Oh no, I mean this is A1622. This is the monthly high. I think this is irrelevant now. I'm going to keep on in this one. This has been traded through. This week low has been repaired. Now we have a weak amount poor, 926. Why is poor? Because it has no excess. And why is weak? Because it's a reference in the lower side from the daily, I believe, the daily and weekly time frames. That's why it's weak. It's like, for example, if the market comes back all the way up to here, got rally and sold from this high, that would be a weak high if it sold from this level. But if the market comes back again in the next period, or maybe 2 periods after, or whatever periods after that, and it's sold again from the same level, that makes it a poor level. So it's weak and poor, would be weak and poor. The way how I try to see the market is different. I have a different approach. Most traders will see that, oh, that's a strong sign, that's a strong level to sell. Most traders. I traded like most traders, and I lost a lot of money. When I saw that, when I realized I was doing what most traders were doing, it just come to me that, this realization that if I keep doing the same thing that most traders are doing, I will end, being or having the same results. Okay, the same outcome as most traders. And the statistics doesn't lie, right? Only, a minimum part of trades, short-term trades are successful. Most of the traders, most of the accounts that are open, the new accounts that are open, are closed in the first 3 weeks. More than 90% 90%, 95% are closed in the first 3 months. So if I could doing the same as most traders do, I will have the same end. So I don't see those kind of highs. For example, if this supposed scenario that I was just imagining, right? Market coming all the way up to here, being sold from this level, and then come back again, being sold. I don't see that as a sign of weakness. I see that actually as quite the opposite. You know, a sign of weakness of inside the sign of weakness in the market. I see a sign of weakness in the movement because it's being conducted. Because the participants or the traders that are conducting the movement are not the strongest one, are not the ones, or the odds. No, it's not that I know what there are, but the odds, right? The odds that are not bigger time frame participants are high. Okay. Why is it relevant to have big time participants in the market? Because they have staying power. That's why. From yesterday, is this 2 ticks? Yes, it's 2 ticks. Anyone who's interested, this platform, I think this is the best platform out there. This window trader. We have accumulation of volume in this area. Down here as well. This is long. This is long. This is short. Why is short? Because what happened afterwards is going on. Now, check this out. This is the daily. Now, this is the intraday. High volume here, 10,000. Only one period here has half, notice 20,000 here. How many periods we have here? 1, 2, 3, 4, 5, 6 times. 6 periods to accumulate 20,000 or 30,000, and only one period for 12. Can you see? Now, the next time in market comes, volume dries here. There's another attempt to come to this area. Volume dries here. No. Another attempt here, this time with volume. Remember, what's the trade? Trades to the upside. What the trend is doing? The trend is to the downside. Traders would be selling rallies. And the only rally that we have yesterday is this one. Can you see this? Can you see the mindset that you have? Very irregular. Notice again. This is also always catch my attention when you have this kind of profiles here. This kind of histograms is very, there's no shape, amorph. Compare that one. I guess what it was with this one. Really nice here. Really nice histogram here. This one. This is awful. But can you see how these profiles are, these histograms are? There's some subtle signs there. Who is doing that? This kind of telling me who is the dominant force in the market as well. That's what I have from this. And I also use these histograms to see where the volume. I can see it here, right? I can see it here. But after a couple of periods, I forgot. I don't remember what happened in the markets in D. I don't remember actually. Maybe this day I could see this one because the market didn't come back, and I forgot actually how it looked. I really do. And the only thing that I can do is I start to rely on the colors. I see reds here, for example, right? Reds here, white here is low volume, relative to the period. Okay, this is relative to the period. This is the accumulated. It is only it's the same as A because it's the first period, but they will start to have shape like as a distribution curve after a couple of periods. And I have a single one here. Now notice this, for example. I don't know why I have this. Relative to the daily, the intraday, I mean, the period itself has low volume on the upper side. It has whites, medium is pink, and high is red. What is the highest of this period? 6,000. What was the highest of yesterday? 10,000. Okay? So it's always relative to something. It's always relative to something. You got to put things in context all the time. Now we are having a counteraction to overnight method. The odds that there is a counteraction, odds are that we are having a counteraction now. Now you check your weekly, your bigger time frames. This is what you will see. This level here, this breakout. I mean, I give more weight to this level actually than this one. This one has been traded through. Now is the second time this is happening. The first time it loses most of its value the first time it's traded through, and the second time is completely, I could say maybe completely gone. But I keep it for a while to see what the market does around this number. If I have a selling or buying from this level, that's also an indication. Like, who is here? The weekly is what I am watching here. I mean, I am starting to pay more attention because we can have excess. We can actually have excess here. Excess. So the market, I can see this chart in two ways, right? Market has excess in the lower side. If the market comes back up here, the market is going to have excess. The other thing is the market is out of balance. It's out of balance in the monthly. I mean the weekly. We might have excess here also. There's a breakout of the 2-day range here. Pay attention on this. The same way how you approach the daily, we are inside range, for example. We are inside range. The closer to the center, the higher the odds of chop on rotation. The market comes outside the range, the market is out of balance. The same goes here. The market is out of balance here. Once the market comes back inside, okay, that's a look below and potential failure. But it doesn't happen fast. That's the question. That's the thing. And traders, we are very impatient. We want, okay, we have this situation and the market is going to, the market is out of balance. The market is going to go lower. So I am going to be short. The next thing we know, the market has stopped. Has closed our position. Patience is very important. Yesterday, for example, I was watching those weak highs, the weak highs that we had yesterday, and this happens all the time. Right? This happens all the time. This is bad. This is bad. This is not good. The good, also, the market is going to come and revisit this or repair these weak highs. It has to pay the lower side. The upper side has not yet. All right. These corrections are being made in the overnight session. The last 2-3 months has happened, but it happens all the time. All right. It's corrected somehow, some way. It is corrected. before, and that's what Jim Dalton calls all business. That's all business. The market has to deal with all business first. Now, the trends to the downside. If the market is coming back and repairing this high, to remove these weak sellers from here, the market will need to go all the way up to here. And why I say that? Because also this C high is coming from a mechanical level. B high is also coming from a mechanical level. This is 30-month range high, which most traders maybe don't know about these levels up here, but they will see the opening. You know? So repairing this, just taking care of all business can't take the market all the way up to here, to this area, which puts the market inside this area, inside this range. Can you see what's happening? Right? What may happen? And that can attract momentum buyers that see the market going higher, that follow traders that just follow price, see the market going higher, so this is a low, I'm going to buy. And that gains momentum and keeps the market going higher. Just taking care of all business. And when that movement ends, because it's just a correction of all business, then the market can do what was doing, or what is currently doing. Do you, or did you picture that thing, that the process? Right? We may be right in our observations, but that part, the market taking care of all business, is what can, how can I say, make us second guess ourselves. I guess I don't know if that's the right expression. Right? Now, we were talking like for how much time? 20 minutes here? Look at where the market is. Now, the market is inside, opening inside previous range, close to the center, the higher, no, the closer to the center, the higher, or the also chop. We're having another chop. Coming up, down, up, down, out, down, out, down. How many trades have you placed already? How many times have you been long? Because now the market is going to break. It's too low. How many times have you been short? The market is not doing anything now. Let the market settle. I let the market settle. And I learned this a hard way. What I'm saying here is what Jim says all the time. And of course, I am a better trader, right? Of course, I am going to make a lot of money. While Jim is just watching, I am going to be trading. You know, I was thinking this morning how trading. Jim's an old trader, and he doesn't teach how to trade. I think that can be improved. I think that's something that he may have a different approach, but that's his choice, right? He doesn't teach you how to trade because he considers that everybody has a different mindsets, different accounts, different interests in when we choose this business, this career. And what he teaches is how the market works. He teaches market understanding. And what he said is, and this is what I remember, right? I mean, let the market settle. Let the market settle, and the market will show you. You will see an opportunity when you are not anxious to trade, when you are not so anxious to trade. You will see something will just come up. All right? That's what he has this saying that the trade will come to you. And there is not too many trades actually, just 2, 3 trades a day. Not trades, opportunities that appear. And I wasn't, no? And what I was thinking in the morning is how he said, this is the only thing, this what I have here is the only thing I use. I don't have indicators, I don't have levels, magic levels or whatever, right? And of course I am smarter, right? Of course I am smarter. I have I have histograms, I have indicators, I have comparators, I have deltas or whatever, right? Oh, if he can be that good, or we can be any good, I'm going to be even better if I have those things. And he always said, don't do that, right? That is just a distraction. At the end, I start to discover what he was teaching me. And I don't know if this is how you learn, or if that's how you learn, how humans learn, right? Just when you discover something, is when you can make it yours. It's yours. You can be hearing that day after day after day, but until you discover it, it's yours. And one of the most important things and the biggest obstacles that is in the way when we learn to trade, or at least it was my case, or is my case, is forget all the crap that we have learned before. Right? Fibonacci's, McCandy's, Head and Shoulders, RSI, whatever, you name it. There are hundreds of indicators, hundreds of techniques, hundreds, thousands of setups. That's BS, man. That's crap. And forgetting that is the hardest part of learning how to trade. This is the only thing ones need. I'm quite confident in that. This is the only thing one need. I am day after day. I'm trying to get rid of these things, of these charts. And I had way more things before. Now you can see I don't have it. I keep removing one thing at a time. What the heck is this? I keep removing one thing. And always, if you want to use something, you always will find an excuse. I use deltas just to enter. Or I use the candlestick 1 minute chart just to enter, just to monitor my enter. That's just BS, man. And I acknowledge it's very hard to leave it. It took me almost 2 years to forget. And the thing of trading is also, it's a very lonely business because you have to have an opinion of the market or what's happening or what you can do, right? How do you approach the market? You need something. But what you think can be different to what other traders think. They are seeing the same information as you, but they may have even an opposite opinion, and they may be right. If you listen to them, they may be right. They will give you good arguments. And that's when the second part of trading comes, is self-understanding. Now we got to know ourselves, because this is what I am realizing, right? Most of trading has to do with your mindset, with your particular mindset, with your particular way to see the market, to see this business. And it's counterintuitive because everybody has their own opinion. And how come it has a lot to do with that? If everybody thinks different. And that's when this part of the loneliness of this business, or at least for me or for retail or short-time traders as us, right? We die to share or to hear somebody's opinion. Because that's how we are. We need positive reinforcement. We need confirmation, or we second guess ourselves, or whatever. Right? And when we look for other traders, it gets, you will find crazy things out there. I have, for example, let's see what I have here. Let me show you. These traders from here are a little bit, they are not as crazy, but some are very crazy as well. But I thought I can't join. I could join. Can I join? What the heck happened here? I cannot join. I wanted to join this server. It was a craziness. Crazy. Unfortunately, I cannot join anymore. What is this? And constantly I'm getting in here. I'm joining. I have invites to join servers. I don't find, but the only thing I find are distractions. You will find fellow traders that you can talk to. You can share your opinion, and you can listen also to them. But I think the most important thing that or to have is, to have the ability to not to get biased when we hear or we listen to their opinions. The first period is almost done. Notice what the market is right at the opening. There's a lot of back and forth, a lot of chop here in these markets. CPE is on Friday. There is some talks about the government shutdown that it looks like it's going to be, that there's not going to be a shutdown. There were a lot of talks out there that this market is going to break. It happened, same thing happened 20 years ago, and there is a crash that's coming. One day at a time. I try to emphasize and try to approach the market one day at a time. Just one day at a time. Dun, 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 dun. Okay. Look at the selling here has happened. Exactly from the center of this period here. Things have get used to sell the market. Right. A low has been taken. This week this week high has not been repaired. You have good amount of volume here. You have 14,000. I think that's good. 14,000 is way more than. Buying coming from value area low. Looks like traders are. The market's trying to break here. You just can't see. Oh, check this out, man. Check this out. Look at this overnight profile here. Did you see something here? Did you see the huge volume the market has here? Is that single prints? Oh, this is the wrong off period. This is the wrong off period. This has a lot of volume here. Huh. Oh, okay. But from yesterday, what I got yesterday, no, inventory was very short here. There was no spike to the downside. And when the market closed, you have a big spike here that took all this. You know, traders that cannot get short. You're forced to cover. And this is high volume here. This is interesting here. This level here. All right. It is 10:05. Unless there's any questions, unless you have any questions, I guess I'm going to call it a day. This is a rotational market. This is a rotational market here. This is level now. The market's. Gosh, let's see the market can take this. I mean, this is the movement. What happened here is a big accumulation of volume here going to the upside, but rather than being buying, the odds that this is short covering, all shorts here that cannot go home short are forced to cover, are forced to cover here. And what short covering does is, what short covering does, it kind of weakens the market. But still, this is just one piece of information here. What's going on? You don't have excess on the lower side as well. The action to the downside has not been completed yet. All right. I think that's it for today. I wish you guys a good rest of the day. Stay safe. Bye-bye.